live now as we do our monthly update. What's happening in mortgages, bringing some real insight and answers to genuine questions that people have as it relates to mortgages. And this month, I put out last week, I think it was, a question to my social media and said, hey, if you could ask your mortgage lender anything, any particular question, what is it that you would want to know? And we got some good questions. We kind of settled on this one around, hey, if I've been paying rent and paying a certain dollar amount, let's say $2,000, $2,500, why is it that a mortgage company lending money is going to say I don't qualify for that? Maybe I've been paying this for several years,
Right.
But you're telling me that I don't qualify for that amount. So before we jump into that, I've got a question for you, Mitch.
Yes.
What is your favorite board game?
Oh, that's really good question. There is a new game that just came out, and I'm trying to think of the darn name of it. It's something like, Corkle is the name. Corkle.
Yeah.
And it's a strategic. Have you heard of it?
I have. I've played it once, but it was some friends, and I can't remember the specifics of the game.
It's where you have little tiles, almost like in Scrabble, but they have colors and they're shapes, and you have to line them up to score the most amount of points, and lining them up like in Scrabble with letters. But you can't play certain plays. Which makes it very difficult, and you have to do some forward thinking strategically. And it's really fun. We have had a lot of laughs and a lot of good times playing with some friends. We play as couples, so that's fun. So if you get another chance to play, you should. How about you? What about you?
For board games, I think Clue was always one of my favorite. Now, my wife kicks my butt at Clue every time we play. Which, for those that have met Brenna, it's no shock, no surprise. They know she's significantly smarter and just more perceptive on those things, but still one of my favorite games.
Yeah, it's been around a long time too. It's amazing how that's stayed around forever.
Yeah,
it's great.
Yep.
Well, neither of us have Monopoly, and we're in real estate, so there you go.
Well, if I were to go to a second one, I think it would have gone to Risk. Although I have a hard time finding anybody to play with because it takes so long to go through the game.
It does. And I have not played Risk in a long time, but growing up, I love that game. Really, it's kind of, I hate to say it, but a little appropriate given the current times we are in, because you're kind of trying to take over the world.
Yeah.
In that game, but a very interesting game nonetheless. Yeah, it's a good one.
They do have one on the phone if you want to jump onto that and waste some time. You can play Risk on your cell phone.
Better than Words with Friends, I'll take it.
I don't know if it's Risk with friends. I think you can build up friends and do it that way too.
There you go. Nice.
Yeah. Good. Cool. So let's jump into this topic, right? This is interesting. And it, the pendulum swung one direction with, anybody could get a loan. You didn't have to have a job. You didn't have to have, proof that you had money. You didn't have to have credit. And then it swung the other way, and they've really tightened down and said it should be difficult to get a $400,000 or $600 or fill in the blank $1,000 loan. So, but logically, right? If I've been renting for 3 years and paying $2,500 a month in rent, the logical conclusion is I should be able to afford a $2,500 mortgage, but that's not really the way that things work. So let's walk through that a little bit, Mitch, and talk about kind of why some of that is the way that it is.
Sure. No, good to be back. Good to see you. And thanks for inviting me on again today. So it's a question that I get almost every day when I'm talking to new prospective home buyers who want to get what's called pre-approved. And one of the things that comes up in the conversation that I discuss is from an affordability standpoint is if they are paying rent, I find it important to understand what they're paying for rent and ask them, has that been an affordable payment, just to start with at the gate. Because that's a good starting point for me to know where they might end up in a price range with a monthly payment that they felt like they can afford. So that number, though, is interpreted differently from the lending industry standpoint versus a landlord industry standpoint. Because what the landlord says is, hey, from your application, it appears you can afford to pay this rent at the very beginning of that lease, and your jobs are there, we run your credit, etc. But the landlord is not looking at the same guidelines that lenders are required to, because the landlord is not giving them any money. They're giving them the right to live in the home in return for rent, but they always have the right to evict them if the rent isn't paid. And that's a much more simple way of removing someone from a home than if somebody owned a home and they went into foreclosure. It's a much longer, drawn out, very expensive process for the lending industry. So the landlord could be a lot more loose in who they'll allow to move into their home, as long as everybody agrees on the payment has to be made on the first of each month, etc. As the tenant, you could say, I know I can afford this $2,500 a month payment, but it might be I end up spending all my money every month between my rent, utilities, car insurance, gasoline for my vehicle, cell phone bill, entertainment, all those things. So as a renter, a tenant, you can spend all your income every month on all the things you use to live, including your rent. The mortgage industry does not consider you being able to spend 100% of your income to qualify for a home loan. They're going to cap that or limit it to less than, well, depending on the loan type, somewhere between 45% of your income and 55% of the client's monthly gross income. And therein lies a big difference, where there's 50 to 45% of other income that we're not taking into consideration for qualifying, because we know that they're going to have unexpected emergencies, possible switching jobs in maybe a week or two time frame of no income, entertainment, things of that nature. So we have to take percentages of the income, not all of that income. So that's the starting foundation where there's such a big difference. And then we roll into, well, how much of your income is going to go just towards the house payment? That's called a housing income expense. And then we also look at the other monthly bills that a client would have, as far as things like car payments, credit card payments, student loan payments, kind of the typical things we would see on a credit report. We do have to include anything like alimony or child support. Some people have IRS payments that they're paying back over the past couple of years. We have to include that. And the unique thing is, if someone's a veteran, we also have to include any kind of childcare expenses. So if they have a child going to preschool and they're paying for that, that's a monthly expense VA requires us to use for qualifying. So different nuances for different loan types, which is really important to know that information when someone's getting pre-approved. But getting back to the rent, ideally, we want someone to spend no more than roughly 33 to 38% of their monthly gross income on the new house payment. And that $2,500 could be 75% of their income, could be 60% of their income. That is much more than our industry will allow, because of the fact that they do not want to come back and foreclose on anybody, ever. That is never the intent of making a mortgage for somebody. So that's where there's this kind of disconnect of, I can afford it over here in my rents, but you're telling me I can't afford it over here because you have different criteria for qualifying. And that's accurate. So, the question is, where do you go with that? And we do look at alternatives for qualifying, but the rental payment versus the new mortgage payment oftentimes are not going to be the same. So that's kind of a big answer to that question, because it's an important question.
Well, I think as we bring back the logical viewpoint, the logical lens to this, right, it goes back to your statement early on, where a landlord is giving you possession of their property, right? Here, you can rent from here, you can live here, but they're not giving you $500,000 out of their pocket to go live in that property, right? So the restrictions or the rules or the criteria are likely going to be a little bit different just from that standpoint.
Correct. And it's going to be a lot different from that standpoint. And, Here's where I think a little bit of the frustration comes in for someone who wants to buy a home, and that is because home valuations have done what they've done as far as increase, even though the market has shifted, still increased. Mortgage rates going up, also increasing the cost of buying the same house. Those that have been renting may not be able to qualify to buy, so now they're going to continue to rent, and then the rental market is such that we're seeing as well because they can. Now we have supply and demand in the rental market for the reason of affordability on the purchase. So when I have that conversation with someone, I'm hearing a bit of the frustration behind the comments and trying to figure out, well, what can we do to help get you into the property? And there are other solutions. We can talk about those, but just kind of the comparison of rent payment versus mortgage payment, they are not equal when it comes to qualifications.
Yeah, and I think back to, how can we manipulate or play this game to some degree? And I'm thinking, okay, I've got a vehicle payment. Let's say it's a nice vehicle. It's $600 a month. You know, could I refinance that and drop that monthly payment down quite a bit? If I've got to use my child's expenses, childcare expenses into that, well, what would it look like if I moved them from the nicer school that they're in to, an in-home maybe that's less expensive? Or, can I move those numbers if we're just right onto the fence so that it, again, looks more affordable? And you're not manipulating the numbers to go beyond what you can afford. If you're already paying that monthly payment, you know that you can survive and get to there. It's just making the bank, the lender, feel comfortable that you can make that payment as they have to cross the T's, dot the I's.
Correct. No, those are all good suggestions, and we do an analysis of how to reduce the monthly outflow of other, of other monthly bills to help fulfill the requirements for the loan. And a very common practice with childcare, because it comes up quite a bit, is a family ends up watching the grandchild, a family member, a grandparent, and it's legitimate. It's not just being done to help qualify for the home loan. The conversation got started maybe with the fact that they needed to figure out how to make that work from a qualifying standpoint.
Yeah.
But then it led into, well, I'll just come watch my grandchild. This would be great. And everyone's like, gosh, we never really talked about that. What a great idea. So they're oftentimes is taken care of with a family member. And yes, the refinancing of a car, oftentimes people will sell their car and buy a less expensive car. If it's a lease, they can go into a less expensive lease. There are many different ways to adjust and adapt to the current debt load that someone's carrying, as long as they can qualify for anything different if qualification is part of it. And even though we weren't planning to talk about this, that's where proper planning and pre-approval comes in, way in advance of starting to look for a home, to make sure if you have to cross this kind of this bridge of how do we get from point A to point B, we've got plenty of time to work and look at all the different angles that make sense for the client. And bottom line, like you said, it still comes back to, is it affordable? We can twist and turn and massage the numbers, but it still has to be affordable at the end of the day for them.
Yeah, twist, turn, massage the numbers, but massaging them where they already know they're comfortable, right? We're not saying, well, gosh, if you do this, you could afford an extra $500 a month in this, and this will be fine, right? It's no, we're talking about what you can already afford, the budget that you've provided to Mitch. And I hear this comment frequently in conversations with the folks that we work with, and it's, hey, we're not ready to do anything yet, but
Right.
And sometimes they're apologetic about it. They're like, hey, I don't want to waste your time because we're not ready to go for another 6 months or a year. That's cool, right? We'll have the conversation any day, no matter what your timeline is, Mitch, because you and I agreed, let's build this roadmap together. And if we have to make some changes, some of those things just take time. It would be the worst to fall in love with the home, realize you got to make some changes. It's going to take 90 days. And then somebody else moves in and buys that dream home that you could have afforded, you could have bought, you could have moved into if we had the conversation started a little bit earlier around how do we set this up for you so it's a win-win.
Right, and that's correct. And oftentimes, and we all live this in the industry, is once someone makes some mental commitment to themselves that a home is in their future, that future tends to speed itself up. And because it makes sense. I mean, it's like I feel comfortable now being able to commit to a mortgage and buying a home and doing the process of what it takes. We would much rather be positioned on the financing side in advance of that one little mental click that does happen every time, to actually start looking and saying, I'm really interested. I saw 3 online. I want to go look at them. Even though your time frame was 6 months, that happened 90 days sooner than you thought. And now we're starting from that period when we could have started 90 days prior and gotten any kind of cobwebs out of anything should we have needed to. And if not, then you're in a position to say, I'm good to go now. I know what I can do when I'm ready. No harm in doing that. There's no cost in doing that. It's probably an hour in conversation, loan application completion, and review of documentation. So it's fairly straightforward. And even in this current environment in the market, in order to put your best offer forward when that time comes to actually make offers, the loan needs to be fully completed. Credit run, pre-approval letters, documentation supplied, W-2 forms and pay stubs and bank statements, all the things that are important so that the process becomes much simpler for a buyer and they're not going backwards. We're going to continue to move forward with find the home, do your inspection, things like that, not get me another bank statement because we didn't start that process earlier.
Yeah, it's never too early to have that conversation and figure out where to maneuver to, right? The specifics that we're going to, because sometimes it's just going to take a little bit of a process to make that custom roadmap to get from point A to point B.
Right, and there is sometimes people just have a little fear about confronting what it means to buy a home. What if there's something on my credit that I didn't know about shows up, and there's concern about how that would really make them feel. And in reality, I think people fear much more than the reality of what it really turns out to be, because it's just the unknown. It's not anything but that. And like, oh, I made a late payment about 4 years ago. I think my score is going to be off by 300 points. And surprise, surprise, you have a 743 score and everybody's thrilled. But we can figure all that out way in advance to make sure the road map can be followed at their time frame. We just want to set that foundation for them. So it works out really well. The clients who do that by far have a much less complicated transaction because they're not trying to do all of it at once. And it's a lot to do at once between live your life, if you have a family, go to work, buy and sell a house at the exact same time that you've never done in your life before, and gather all the documentation and go through the inspection. It is adding a ton of fuel, and it's a big task. Now they do have people like you and I guiding them, but we can't change their emotional state and what they're feeling. We can only support that what they're feeling is very valid, and we're going to help them through and navigate through those processes. But we can really take out a lot of that up front with the financing part being done.
Some of it is just, Mitch, for lack of a better term, it's a pain in the ass, right? Mm-hmm. When we look at all the documentation we have to put together, when we look at packing boxes, when we look at doing those things, it's not like going through the drive-through at McDonald's and getting a cheeseburger, right? That's a very simple, easy process. Moving, especially buying and selling, right? There's complexities that are involved with that. So let's take that shrunk down time frame where we're trying to do it in a couple of weeks or a month, and let's expand that out. And again, we can help through that process. So back to the original question, why is it set up this way? Well, here's why. And I'm thinking as we're talking, Mitch, there's most of the loans are sold to the government or backed by the government, right? So they have to fit into this box. Mm-hmm. There's also portfolio lending, which is more like the bank just holding it on their books. Do you envision a company coming out with a program that says, hey, your credit score is good enough. You've been paying this rent for long enough. we have faith that you're going to do it, and you're putting enough down that if we had to foreclose, we're probably not walking into a bad situation. Do you foresee a portfolio lender saying, "Hey, this is a niche that we could serve," or do you think that that's something that's still too risky as it comes to the lending and the mortgage institutions?
Yeah, I don't. I would say that it may not be coming down the road that I'm aware of. I think it's not a level of the risk, though it's all everything is based on risk. It's the level of how do we support that this client can actually make these payments. And rent is definitely one of the items that determines someone's ability to qualify. And interestingly enough, all the loans that direct lenders, mortgage bankers do for the good traditional loans are all government backed. So there's guidelines and rules we all follow, of which in most cases, rent payments are never considered in the qualifications. So to your point of it being a niche play, it would be a niche product to base some portion on it. Now there are loans we do that we use a software program that doesn't approve a borrower for whatever reason. Then our underwriters can override that software program and says, let me see their rent payment history. Number one, are they paying on time? And number two, what's their current rent amount compared to the new mortgage amount? And that's an item that's called a compensating factor. So if that rental amount and the new mortgage payment are similar, so let's say the new mortgage is 10% higher than the current rent payment, that is something the underwriter can say in good conscience that these people can afford this payment because the rent and the mortgage are very comparable within 10%. I just actually closed a loan like that we had to do that. It was an FHA mortgage. Fannie Mae or conventional loans do not allow that traditionally. But we do bring it up when we need for compensating factors. But it isn't a specific program that I'm aware of that allows you to just hang your decision on that. But there's also back into play these, for lack of a better word, subprime loans that left and have come back to where we can use alternative documentation to help somebody justify income to qualify. That is definitely interest rate driven based on risk. And so instead of getting a 5.5% 30-year fixed rate, you're getting a 7.5% to 8% 30-year fixed rate because you're not able to satisfy the typical guideline requirements. So they do exist, but they're not great. They're not as good as an alternative loan that I would like to see. Going back to your comment on a portfolio lender, so a bank or credit union, they do use their own depositors' funds to make home loans. That's the portfolio side of it. That's where the money comes from. They can't sell them anywhere and collect that monthly payment. They can create their own guidelines and rules. They have a set parameter, but then they can tweak and twist those a little bit if it all makes sense. So for example, let's say a client has a lot of cash in the bank that they can move to that bank or credit union, and the bank can hold that money as kind of collateral for the loan. That's a possibility when you have some other less income to qualify, but you can support it with other avenues. So sure, and that happens now, by the way. That's not unusual. It's just not always the best loan, but it is a great loan if it's your only loan, for sure.
Well, yeah, Mitch, I don't think my bank account's big enough, so we might have to pull some investors and do some private money lending here for folks in this scenario. Because again, it looks like there's a niche product that's there.
Yeah, we call that crowdfunding, man.
Yeah, perfect. Whoever's watching this that has some experience with crowdfunding, please DM me and Mitch. Let's get this figured out. We'll start finding solutions for folks, right? So
exactly. So there's alternatives though to helping someone qualify when they feel like they can afford a higher payment, because that's really what this is typically about. And that would be co-signers. Some people forget they have a 401k that they can borrow against and have a larger down payment. So there's different avenues to consider. They could sell a car if they had 3 cars. One was a secondary car. They could sell that, have cash, use that to buy a place. There's other ways we can put that together. But oftentimes when people ask about co-signers, they feel that a co-signer is going to help them be able to qualify for more, but they forget the payment's going to go up too. So the affordability all of a sudden changes, even though they qualify with a cosigner. So we have to be careful around that.
Yeah, it's a balance, right?
It
And
is a balance.
if you've got an extensive baseball card collection that's got value, right? Find ways to sell it instead of just lugging it from house to house over the years in boxes.
Correct.
Um,
That's correct.
yeah,
So the nice thing is we can find alternatives if need be, and sometimes we can. Sometimes it's just you have no one to co-sign, you're limited on funds. We're looking to do a down payment assistance program to help with those down payment monies and some closing costs. There's some limitations there. We can only work with what we have to work with, and then that's where sometimes the results are. Unfortunately, we can't go any further today. But let's talk about what can you do to position yourself, if possible,
yeah,
down the road, maybe in the next 12 months. And can we put a budget together? Can you pay some debt down? Can you change jobs and get a raise and look to earning more income? Oftentimes there's a spouse who's staying home that's going to be going back to work in a year or two, maybe staying home with kids, and now it's time to go to work because the kids get to go to school. Someone's in school, like they're in college, a spouse or a partner, and they graduated, now they got a job, and they'll get that job in a year. We ask all those questions to find different resources to help improve their positioning for qualifying.
yeah.
So,
Well, and you mentioned changing jobs. There's a podcast that I listen to frequently called Win, Make, Give, and there's a series called the Wealth Series I've been through a number of times. But one of the episodes in there, they actually walk through how to ask your boss for a raise in an appropriate manner. That as a business owner, I would say, hey, gosh, if somebody came to me and offered that, I would say, great, let's have the dialogue. I want to find ways to help you make more money, et cetera, right?
right.
Not everybody's going to be in that position to do that or want to take that route. But again, if you're in that, hit me up and I'll get you that link, that episode. So for those that asked the question, had the curiosity around it, here's what I would say. Reach out and connect with Mitch, see what Mitch has, because the alternative methods or opportunities for the income that he's talking about might be just what tips that scale so that you can get into home ownership or back into home ownership, whatever the scenario might be. Because it might be the conversations you had with whoever you were talking to at the bank or your previous mortgage lender. They don't have the tools, they don't have the resources, they don't have the experience that Mitch has. One of the reasons why, Mitch, you and I have these conversations is because when I ask you questions or say, hey, have you ever heard of,
Right.
it's very frequently it's a, yep, here's kind of the avenue, the road, or here's a program that solves that issue. And it's rarely I don't know, don't have a clue, don't know where to find out. Because when you don't know, you also go find the answers and
Sure.
see who's got that experience. So again, just if you're watching, you've got more questions on that, reach out to Mitch.
Yep, let me know. I mean, we're always learning in our industry. The rules are changing, the guidelines for mortgages are changing. If you saw how many pages are in one book for a Fannie Mae conventional loan of guidelines that an underwriter needs to know and a loan officer, because we're underwriters in the very beginning of the file, that's our job. There's a lot going on that I don't want to make a mistake. So I will say, let me look that up. We have great tools for searching to see if anything's changed since that scenario's come up. And most things I know off the top of my head, some I'm going to say, I read something recently, let me double check. And that's crucial. You want to make that, there are mistakes that are made, typically overcomable, but you don't want to make the big one that you can't overcome. So it's important to double check. And I know we're men, we don't like to ask for directions. However, there is a line in the sand that says, yeah, it's not just affecting me this time and my timing and showing up to the restaurant on time, it's my client buying a home. That's really important. So.
Well, and Mitch, there's so many more rules and regulations as it relates to your job than mine. So thank God you're in the position, and don't ever retire until I'm out of the industry and retired myself.
I will wait for you to tell me when that day is available to do so. Thank you.
I'm going to sign your permission slip, says it that you can retire.
Write me a prescription. I'm in.
Yeah, so there were a number of questions on that Facebook post that we didn't choose to talk about. Not that they're not valid questions. Some of them are just very specific to somebody's situation that's hard to talk about in a general forum like this. So Mitch reached out to those individuals and commented, right? So again, open that dialogue. Doesn't mean you have to do business with Mitch. Doesn't mean necessarily that you have to make a transaction. Mitch is open to the conversation. My hope, and I'm going to say this for you, Mitch, is that if you've got the solution for them, I hope they choose to do business with you. And that's just the way that I look at it, right? And I know that you've got a very large book of solutions for folks.
Great. Well, I appreciate that support. And, there are moments in our industry where we'll be called or I'll be called by another realtor who I work with or yourself who says, hey, I'm representing my seller, but the lender on the other side of this transaction is having some issues in getting this loan through. My first thought is, can we try and help them solve it without the buyer moving companies? Because that's starting the clock all over again for everybody.
Yeah.
So I'm happy to always do the solve that way first. If we couldn't, or if the lender's not open to that conversation, but most are, then we go to plan B and say, well, here's how I think it can be strategically put together, given the guidelines that I'm aware of. Let's talk further. So I'm open to any and all conversation around that. I think if we continue to pay it forward and help our industry and people in general, as we know, our world needs a lot of that right now. So the more you and I can do our little part to help support, make a family be able to buy a home, and be very happy with that new home, that there's a lot of joy in doing that, even if I'm not the lender involved, or if you're not the realtor involved.
Yeah.
So,
it's an interesting dynamic in our world, right? In the real estate industry, is that it's just by design very collaborative in nature. We all ultimately have the same goals. So that's what I found. That's what I've experienced, and it's been an amazing resource to have people like Mitch and some of the other realtor partners, right, that I have that I've got questions on this, or you've got something like that. Again, it's just very cooperative by design.
Yep, and that's the beauty of our industry. We become partners with all parties involved for 30 days, and then typically our paths cross in the future, but they come and they go in that time frame. Our clients' relationship lasts a very long time, but the other parties involved that we're on different parts of the transaction, we may or may not see them in a short amount of time. So
yeah.
Okay.
Well, I think we've sufficiently covered on that.
Yep.
Mitch, any final questions or thoughts on that before we jump off?
Yeah, I think my final comment would be, don't be afraid to ask. All you can do is get information to determine what your next steps could be. And if you don't try, if you don't ask the question of, can I be approved to buy a home from the standpoint of a new home loan if that's needed, finding out the information can be extremely liberating to then know what the next steps are. I've had many people call and say, I'm so scared, I didn't think I could do anything. And the next thing we know, they're out looking for homes and going under contract. And that is just overwhelmingly a lot of fun and joy that I get from someone who thinks they couldn't do something just because they didn't know what the information entailed, and that they could actually do something that was affordable and made sense for them. So that would be my message. Don't be afraid to ask. Whoever it is, ask, and then the rest will follow.
Don't know what you don't know, so let's get to the experts and find the answers.
Exactly.
Yeah. Awesome. Well, again, thanks so much, Mitch. We enjoy these conversations and getting to educate those that are watching. And again, it's always fun for me to figure out. And of course, I hear something, my brain goes down a rabbit trail and saying, hey, what about this?
Sure does, Matt. So I've been there with you. Been in that hole together.
Yeah.
Excellent.
So, and as you're watching these videos, if you've got specific questions, you want to connect, let me know what you want Mitch and I to talk about, and we'll make sure that we get these things covered.
Yep, those ideas are helpful because it tells us what people are wanting and needing as opposed to what we think is important to talk about.
Yep.
And it could be the same and they could be a little different. So
yeah, for sure. So
cool. Thank you again.
Yeah, Mitch, you enjoy the rest of the week.
I will. You do the same, and we will connect soon.
Sounds great.
All right. Thanks, Matt.
All right.
Bye. Bye.